Dear viewers, stay tuned for another Cryptoverse weekly report. The fantastic days for crypto continue. Bitcoin does not stop breaking price records. On Friday, it jumped to $99,500, and with this new all-time high, it is now less than 1% away from that psychologically important level, $100,000 for one BTC. In only about 20 days of November, the leading crypto is up about 40%. And altcoins are not far behind, on the contrary. Solana's SOL hit a new all-time high, and ADA and XRP hit multi-year price highs. All in all, a perfect storm is underway, which, judging by historical patterns, should continue for months to come. And today, among other things, we bring you Bitcoin within reach of $100,000. ETFs keep hoarding Bitcoin. They now have $100 billion in assets under management, with more than $30 billion in cumulative net inflows. Michael Saylor is preparing a presentation in which he will try to convince the leadership of Microsoft to buy BTC. The world's largest financial institutions are entering crypto. Charles Schwab Corporation has announced that it will offer clients spot crypto trading early next year. Great weekly performance by leading altcoins. So, let's start the report. It should not be forgotten that all this great news for crypto comes at a time when the pro-crypto administration has not even taken office yet. How next 4 years will affect the global situation, who will be the losers and who the winners, how geopolitics will look like, and how the world economy will look like. All of this is, of course, a big unknown. But what is certain is that one of the biggest winners of the new tides in American politics is the crypto industry. And that it is really so was already clear already on November 6th, when Bitcoin went on an instant, unstoppable rise and entered the phase of price discovery, temporarily stopping just short of $100,000. By the way, on this day just 2 years ago, on November 22nd, 2022, BTC experienced a sharp decline, driven by the collapse of one of the world's largest crypto exchanges, dropping to only $16,000. Today, those price levels seem almost unreal. But let's get back to the current news. This week's once again excellent performance of the leading cryptocurrency was influenced by several factors. One of the most significant was the launch of options on spot BTC ETFs. The largest ETF, BlackRock's IBIT, broke the ice on Tuesday, and the others followed the day after. The launch of these financial derivatives is very important because it will most certainly attract new professional traders and institutions, and thus bring fresh liquidity. And ETFs continue to amass Bitcoin and hit another major milestone this week, with $100 billion in assets under management and more than $30 billion in cumulative net inflows since their launch in January. By comparison, much older gold ETFs manage $127 billion in assets. So the skip could quite easily happen by the end of the year. From Monday to Thursday, ETFs removed almost $3 billion worth of BTC from the market. Then came the news that next month, the CEO of MicroStrategy and one of the biggest BTC bulls, Michael Saylor, will try to convince the management of Microsoft in a 3-minute presentation to invest part of its cash reserves of $78 billion in Bitcoin. Everything will ultimately be decided by Microsoft's shareholders, who will vote on December 10th on whether BTC will be added to the company's balance sheet or not. The board is currently averse to such an idea and has recommended that shareholders vote against it, but perhaps Saylor's 3 minutes will change the minds of Microsoft executives. In a symbolic sense, the addition of BTC to the balance sheet of Microsoft, the world's third largest company, would be an incredibly significant event and certainly an indicator for other business giants to follow suit. In addition, MicroStrategy of that same Michael Saylor announced that it has raised $3 billion by issuing bonds, most of which will probably go to buy Bitcoins. It's part of the 2121 plan, which aims to expose $42 billion, primarily to buy Bitcoins over the next 3 years. For reference, this company currently holds an impressive 331,200 Bitcoins, valued at more than $32.7 billion. And indeed, in the near future, there simply won't be BTC for everyone who wants it. Of course, at approximately current prices. And that everything is ready for new records is also shown by the fact that the liquidity of stablecoins, with $174.7 billion, is now at the highest level of all time. And what will happen when Bitcoin exceeds $100,000? Will there be a correction, consolidation, or just a real price explosion on the wave of FOMO? These questions are difficult to answer, but everything seems to indicate that a stronger correction, if it happens, will not be long-lived, because in addition to existing investors, there are many others, even the largest financial institutions, who are just getting ready to enter the crypto space. And the signals are getting stronger that retail is back in the game, that is, retail investors. Meanwhile, the announcement of one of the leading multinational financial giants, Charles Schwab, which manages assets weighing more than $8 trillion, that it will offer clients spot crypto trading from the end of January, has echoed loudly, because according to the company, it will bring clear regulations for industry. And the number of such TradFi institutions, which like Charles Schwab, plan to open up to digital assets next year, is growing exponentially. Simply put, no one wants to be left out of the game anymore because, as Schwab's new CEO Rick Wurster himself said, crypto has certainly attracted attention, and many have made significant sums of money. I didn't buy cryptocurrencies, and now I feel silly. And this is where we come to the so-called reflexivity, and even among the leading people of the financial industry. Namely, financial markets deeply influence human behavior. George Soros famously coined the concept of reflexivity to describe the relationship between perception and reality in financial markets, and Bitcoin is a good example of this concept. As its price rises, the property attracts more and more attention, which leads to further investment, driving up prices even more. We should also not forget that BTC is an asset whose supply is truly limited, more limited than precious metals or stocks, because there will never be more than 21 million Bitcoins. Therefore, it is the scarcity of Bitcoin that actually makes it fundamentally valuable. And when demand increases, given the limited quantity, the price must also increase. With all of the above, demand could be further strengthened by the possible formation of strategic Bitcoin reserves, which was new administration's leading man's promise and which Senator Cynthia Lummis is trying to push through Congress. It should not be forgotten that Republicans now dominate both houses of Congress. And that such a move is indeed planned is also indicated by the news that an advisory crypto council will be formed that will lead American policy related to digital assets, cooperate with regulators, the SEC and the CFTC, to define the treatment of crypto companies, and of course, to develop a plan to create Bitcoin reserves. And if such a move were to actually go through in the US, there should be no doubt that there will be a snowball effect and that numerous states will follow suit. So how high can BTC go? All that being said, it's really hard to estimate, but more and more industry players seem to think that $100,000 is just the beginning. For example, crypto billionaire Mike Novogratz is convinced that the price could rise significantly more. With pro-crypto leadership, global demand from the Middle East, and limited supply, the stage is set for significantly higher prices, writes Novogratz on X. In this week's news that Gary Gensler, the hated chairman of the U.S. Securities and Exchange Commission, the SEC, has decided to leave his position has strongly resonated in the crypto industry. This is, however, quite expected, since it is usual for the mandate to be offered with a change of administration, but also because of the promise that Gary Gensler will be fired on the very first day of the mandate. Well, now he won't even have to be fired, because Gary is leaving exactly on January 20th, a very significant day indeed. The crypto industry does not like Gary Gensler, to put it mildly, primarily because of his tactic of managing the SEC, which has come to be known as regulation by enforcement. In fact, the SEC has repeatedly sued U.S. crypto companies without first elaborating on legal interpretation or issuing rules clarifying when cryptocurrencies should be treated as securities under federal law. And this is de facto all digital assets except Bitcoin and Ether. Now, with Gensler out of the game, ongoing proceedings are expected to mostly end in settlements or light sentences. Of course, this announcement of his departure had a beneficial effect on the alts. And while Ether remains stagnant at around $3,300, some other top altcoins have had great results this week. Sol thus reached a new all-time high at $263 on a flood of applications for the Solana ETF, whose approval with Gensler's imminent departure is now much more likely. However, the biggest winner of Gensler's resignation so far is XRP, whose issuer Ripple continues to fight with the SEC in the courts, although it received partial satisfaction after the ruling that the secondary sale of XRP, the one on crypto exchanges, is not the sale of an unregistered security. On the news of the departure of the head of the SEC, XRP jumped 25% on a daily basis, while its weekly plus is as much as 60% and moves above the $1.40. In the meantime, Doge did not grow much this week, only 7%, but ADA continued the rise. Cardano's coin ended Friday with a 12% daily and 35% weekly growth, and in the last 30 days, ADA soared as much as 150%, jumping over 90 cents. As for the leading weekly gainers in the top 100, Mantra, Stellar, Hedera, XRP, and Tezos lead the list. And so, with altcoins, we have come to the end of another Cryptoverse weekly report. If you liked the video, please give it a like, leave a comment, and we would also greatly appreciate if you click subscribe. Thank you for following, and kind regards.